All right. Good morning, good afternoon, or good evening, depending on where you are in the world. Welcome to the official Trade Talk channel, where I show you how I analyze price for the most consistent and higher probable entries to help you all become better traders. A little bit just waking up, so my eyes are still blurry, voice still froggy. Everything's good though, because it's not 9:30 just yet. We did miss a newsprint this morning, but it's okay because it really wasn't a big one. It's not something that I really even pay much attention to, but we'll go over here and look at it real quick. Just if you're wondering why there was such a sudden pop in price, it was based on this number right here, the PPI. Not really, a massive number. It does have something to do with inflation, but it's the producer price inflation. So yeah, not a big number. There wasn't a trade to take on it, nevertheless, as you were already trading at the high of day on the S&P 500. This is yesterday's price action, so you were already trading at today's high when the news came out, and you just went straight up from there. And now you're seeing a little slight pullback over there on the SP 500. If I pull out this daily chart, you're going to see that you are trading well above all the other highs. So now I could see this thing bringing in or coming in with a pullback. We are looking for a pullback as low as 39.11, but I do expect, even if that were to occur, right here's a daily support level. So, there's nothing that says it has to get back to 39.11. It could absolutely just trade to here, find support, and go back. But we are looking for continued bullishness. We're not looking for all-time high prices or anything like that. We're just looking for the rest of this month, which is November, to continue with this bullish sentiment based on last week's CPI reading. That was a very, very bullish print. So that's why we're looking for bullish entries. And again, we're doing the same thing on Bitcoin. As long as everything is done and over with FTX and no other exchanges fail, I do expect Bitcoin to get back some of those losses, simply because that was a red herring, if you will, a black swan event, and it's basically what caused Bitcoin to sell off. At up until that point, Bitcoin has been very, very correlated with risk markets. So since you had a nice big strong bullish week on the S&P 500, theoretically that's what you could have seen on Bitcoin as well. Unfortunately, the FTX saga was just too much for this market to handle, but that's okay because it gives us an opportunity to buy Bitcoin cheaper. We do think that this market is going to bounce, and there are a lot of other reasons why. So we will continue to look for those bullish entries. As of right now, you got one major support coming in down here. That is going to be weekly support. And then this daily support right there is basically where I told everybody to look for buying opportunities. I told everybody inside of my community, and I even brought it up. Where was it, on Twitter? I don't remember. I know I said for everybody to be looking to be a buyer right there, as that is daily support. You can see yesterday you traded all the way down to it. That's where you found support, and that's where you got the bounce. Ended up closing the day out strong. So the next place that we were looking for buying opportunities yesterday was there, as that is the opening price of yesterday's candle. It is also support. You can see here you traded down to the open right here. Yes, you did close an hourly under it. So I would have been a little bit suspect about taking a bullish entry there. But as soon as you got back above it, you could have taken your bullish entry on this wick lower, through your stop under this right here, and then seen what happened. And if you've done that, right now you're sitting pretty in a very bullish, you're sitting pretty in a bullish entry, and you're not that far from the freaking lows. So if you did get long there yesterday, kudos to you. Good job. That was a fantastic place to do it. I don't know if you will get another test of this price down here. It is possible. It's just not that likely, as long as everything stays up. Sorry, I got stuff going on the other monitor over here. Let me get something pulled up real quick. We have seen, and the Fed Watch tool is pricing in like a 50 basis point hike this time, not a 75. So that's something. Let's go over here to Glassnode. Let me go ahead and log into it on the other monitors so that way, yeah, everything's all kosher there. And good morning, everybody. Good morning. Good morning. Sorry, I overslept. All right. Excuse me. Here we go. So here is, what is this? Get out of here. All right. So we're going to go over here and we're going to go just look at your accumulation trend score because we see something happening now on Bitcoin that we haven't seen since these days over here. And that is accumulation right through here. You can see that on this move lower, your accumulation started to kick up right there. Then the accumulation trend score printed a nice over 0.5% there. And then the last 4 days, except for that one right there. So the last 5 days, you've seen straight up ones being printed. One, one, one. Right? So you got 3 ones over there. That's the highest. That is the highest trend score that you can get. So that does indeed, say that people are buying Bitcoin right now. Put the call interest or open interest should start to slide a little bit now since we've had that massive down move. I do expect a lot of people to liquidate those positions or at the very least take profits, but they could be expecting a little bit more of a down move. And then if you just look at your open interest right here, where we were trading sideways up at around 11 and 12 billion in open interest, this down move finally did liquidate us, and we did see this nice stuff over here, which is nice. That's what we typically want to see. We want to see these big directional moves wash out some of the open interest, as it's usually a good thing, right? So I'm not saying that that's capitulation or anything, not even a little bit. I'm just saying that it's a good thing, all right? And then here is, you could see that when we had that big down move, according to Glassnode, you only liquidated $26 million worth of shorts. And then the long liquidations should be a lot more than that. And it is. You can see $104 million worth of positions there liquidated on this move lower. So quite a bit of volatility. These short liquidations came from the initial run up, I would say. That day that was very, very volatile. But nevertheless, you somehow managed to liquidate both sides of the market. So I do believe you're going to find a floor pretty soon. And like I said, this is all dependent. What is going on? This is all dependent on if any other exchanges fail or not. Okay. So that's that. If another exchange is to fail, then you will see this thing come off a lot further. All right. So keep that in your mind. But as far as I'm concerned, I think, since you liquidated June's low, I think that, you could look for long entries now. But we'll see how it plays out in the future. Naturally, you're still under the 21 exponential on the daily time frame. You're still well under the 50 on the RSI. But here's the thing that, here, if you go over to the weekly, let's pull this up. You can see that you do have bullish div right there on the weekly RSI, right? June's low comes in at the lowest point on the RSI of all time, right? Then you have this over here that's much lower than this wick. Pull it down so you can see here. This is much lower, so you do have divergence from this swing low to this swing low. So that's one thing. Do I expect, bullish price action to occur based on the bullish divergence alone? Of course not. A lot of people are going to be spooked out. Whoever didn't get liquidated on this move lower, your hodlers that are still holding, it's unlikely that they're going to be wanting to buy down here simply because the market is so overwhelmingly bearish. The sentiment out there is so overwhelmingly bearish. But what you need to understand is there is a correlation to risk assets. And once investors understand that no more exchanges are going to collapse or no other firms are going to collapse, no hedge funds or anything like that, investors will bring back their funds. They will invest them. In fact, we are seeing that based on the accumulation trend score already. So whereas this entire move lower from August You have not seen that accumulation trend score even fire up a little bit. It, as a matter of fact, was saying the exact opposite. It was saying that nobody was buying up there. So let's go back just 1 year for this. So this is what I'm talking about here. This is that little move right through there. Why does this? Oh, it's a line chart. All right, so here's the last point of time where you had accumulation. This is your August high, and then after you came off, look at all these trend score numbers. There's nothing there even over a 0.5. So nothing was happening here. It's almost like investors were waiting for one final liquidation run, but it's not a capitulation because we just don't see that on chain. So it could continue to go lower. I mean, if you want to be bearish, because I strongly suggest that you don't, simply because you've already had the move, right? Like the short move, in my opinion, is over. You're off almost 80% from the all-time highs. Looking for continued short trades down here is almost begging for trouble. You're actually doing it wrong, right? Let's see here. 76% down there to that wick low. 77%. Almost 80% off. When you were supposed to be looking for shorts was here. Like when I told you to start looking for shorts, when I told you to start taking profits, because we were expecting the markets to fall off. That's when you should have been looking for shorts. And then your second opportunity in this entire year to get short was when you made fresh 2022 highs right there. That's where you should have been looking for shorts. Down here, not so much. All right. So we'll see how it plays out moving forward. But let's go ahead and see if we can't find something to trade here this morning. I am, like I said, showing up rather late. I like to come to the monitor at least before 9. I'm just looking at my watch list here on Thinkorswim, and I don't see anything moving because this thing is lagging. So we got Amazon up 3.6%. You got NU up 14%. Peggy, it's a penny stock. You got that up over 50%. That's also your volume gainers on the day. This is your volume gainers. Apologies. This is just percent gainers or percent change gainers. These are the ones that are up biggest on the day. Let's go look at Peggy real quick. There's a nice big strong bullish candle. It doesn't look like a terrible stock. It does look like whatever happened over here got it fired up really good, and then that's getting sold back off. So this looks like a profit-taking move on shorts parts, if you will. So we'll see if I'm not going to trade it. It's not something that I like. If I'm going to trade a low float, it's going to have to be a low float, right? I don't know the float on this, but I don't have my other stuff pulled up right now to tell you if it's tradable or not. So we'll have to take a pass on that. But we will look at some other things. Anything that you guys want to look at, just go ahead and drop it in the chat. I am in a USO short right now, but I think I'm going to take profits on it because it is at the bottom of the options market expected range, the expected move for the week. You can see right here. This is what the options market was pricing in to be the expected move. Now, with all this volatility, you can naturally get price to break out of these areas. Like down here, you can see this 2 days into the week, you dropped all the way down here. Pretty much the same thing that we see right now. And then you had one final day of downside, then you had a big day up, right? So my entry was up here on Friday, and it was based off of an old daily resistance level. I will pull that up over here on TradingView real quick. This is just for, the public, so that way they know. Full transparency, if you will. Going over here to oil, because a lot of people think oil is going to continue to go up. I am not in that camp. I think oil is down, right? Oil's you're down almost all the way to the yearly open. Just under this swing low here is your yearly opening range. I think this was just a yearly open range bounce. You can see here that you put in a nice little double top. You liquidated the previous month's high with that, and then you got a bearish reaction. So that is why I took the short on USO, and I did it on this day. Now, on this day, oil was up almost 5%. So it was a little bit more of a risky trade. But I was looking at it, like I said, yeah, almost 5%, 4.6%. I was looking at it to be just a bullish pop in this leg lower. You are coming into daily support. There's a daily support right there. There's also a daily support right there. So you got two daily supports that oil could find support at and start to bounce. So if you are in any oil shorts here, you might want to think about taking some profits. One thing about my strategy is you always take profit. Always. You never sit in a position expecting it to go lower. Excuse me 1 second. All right, there you go. So you don't sit in a position expecting to make more money off of it because we can't see into the future. So when your profit target is hit, you should take profits. I had a profit target on USO of $71, right? And we're here. Wasn't quite, exactly 71, but it was this daily support. That's where I was looking to take profits, and then see what happens. All right. The short on oil was a long time ago as well, but this was the first opportunity for us to actually get a short trade on it, where it actually gave us a signal. All right, so this was the daily resistance that I took the short off of right there. So when we traded up into that, that's basically the technical level that I based the trade off of. So that was my entry. I bought $75 puts, and now price is $71. So that's about $3 and something cents. I am about six. Damn it. Oh, here is the position. I took it, 20 when I took the position it was 27 days out, but I bought it when it was in right at the money. So when it was here, that's when I bought it. As you can see that it is in the money now. I can't get $5.30 for them if I were to sell them right this second. This is the ask price. And whenever you're selling, you got to sell on the bid. But you can, since it has such a wide spread, like $4.70 on the bid, $5.30 on the ask. I could put a limit out there for $5.10 and see if I get the fill. Right? Somebody might take that for $5.10 because it's cheaper than that. But we'll see. I don't know if they will naturally, but you can play inside of the spread in the options market. So I bought them for $3.50, $3.55. You can see even though it's dropped down into the money significantly, they're actually only up a little over $1. So it's not a fast moving stock. That's why I bought it with 27 days till expiry, because I knew that, it could take a long time to move just a few dollars. Your higher beta stocks like Tesla, which Tesla's been split now a couple times, so I don't know if it is still a big mover. I know the premium on it is still very expensive. So it's just because it's a high beta stock. It moves, the options move rapidly, the pricing. So into support, I'll probably go ahead and close that out and then look for entries on a spike higher. Since I don't know what it's going to do, you could take profits, like just close out a couple of them if you have multiple, right? All right, moving on. And that's pretty much it this week. I took two losing trades on Friday. I tried to get long pound yen. That trade did not work out. And I tried to short Bitcoin. That did not work out. So two trades Friday that I lost. This one was the one that worked. What am I looking for here? On watch. All right. So the USD JPY trade is still doing really good. It's actually saying more of a down day because of the PPI, because of that news. So everything's looking okay. I mean, the portfolio is growing, and that's what we're trying to do, right? It's a pretty volatile move on the dollar, even though the dollar is currently down on the day. Somebody in the Discord brought this up. This thing has moved almost a whole percent back to the upside. So there's quite a bit of volatility out there in the marketplace these past couple days, past week or two, if you will. Good morning, everybody. Good mornings, good mornings, good mornings. Can you please check Solana? I would stay away from Solana, man, because we know FTX owns a pile of it. A ton of it. Hang on, let me get Bitcoin back up over here. Well, Bitcoin's coming off. We'll have to see if it finds support, because we are in buy mode. All right, so we'll watch it right there. See if we can get a tag of that and see if that level holds a support. If it does, we'll look to be a buyer there. If it doesn't, if it breaks down, this will be our next level to look for potential buying opportunities, which is just above the open there. So we'll keep an eye on it. We might have a buying opportunity getting ready to happen on Bitcoin. All right, Solana. It's not really something that you should be investing in, because we know that FTX holds a ton of this. In fact, like, FTX hitched their wagons, so to speak, to Solana. So a lot of people were expecting it to go to zero, but it's still holding up at $14. You can't even trade FTT anymore. It's done. They're filing bankruptcy. FTX is no longer an exchange. They are done. It is over. I don't know if people's going to be able to get their money back or not, but I wouldn't be surprised if he doesn't spend time in jail. That is illegal, what he was doing. But I mean, right now, while it's trading like Bitcoin, then you're going to have to look at it like position yourself the same way you would on Bitcoin. Solana to me looks like after you got this big bullish bounce, right? You just went up and made a fresh daily high, and you took out yesterday's high, and now you're rolling over. So if you were looking for short entries on Solana, you should have been looking around 1490. I mean, you don't get a better entry than that. That was a very simple trade to take if you were looking to short it. I just woke up, so I'm looking at the charts for the very first time this morning with you all. My apologies for that. I like to be up and already have a game plan. But I slept right through my alarms. It's my cat that woke me up. So yeah, it does look like it's trying to pull back here. Can it find support there? It could. If Bitcoin finds support, then I expect Solana to find support. I wouldn't be surprised to see it just be a red day based on a pullback because of this, right? The S&P 500 almost traded up to supply, a big supply zone. So this is our next upside target on the SPOOs. But a pullback will probably happen before that. So that's what we're waiting on, is a pullback. We'd love to get it at 39.12. If we could get it down there for buying opportunity, we'll take it then. As of right now, I'm not really interested in looking for the short. I would rather be looking for the long. You can see that your daily 21 exponential moving average is all the way down there. So, I mean, it could take a while for price to pull back into support. Right? But I am looking for a support check nonetheless. Solana is just one of those dangerous ones. It could get a bounce. If Bitcoin does indeed find the low, if that ends up being the low, then you could see Bitcoin jump. Solana could go with it, right? There's nothing that says that it has to go. Give me 1 second here, because this is bouncing off support. It's up a buck. Like I said, it's up a buck 50, buck 40. Um, Let me see if I can get it at it's while it's bouncing up, it's very unlikely that I can get it at $5. So I'll put a limit at 485 and see if I get filled. Yep, I got filled at 485. So you don't have to take the price that's on the bid. You can move it up. It took it a second, but ultimately someone was like, "Yeah, sure, I'll buy it." And boom, I'm out. All right, so what I'll do on USO, like I said, is I will wait for another chance to look for a new short opportunity. I mean, from here to here is a pretty damn good gain, right? Yesterday was a very good day for me on that asset specifically. Matic, let's go look at Matic. It's not pulling back as hard as Bitcoin, but I mean, here, once again, it looks almost identical. There's going to be people screaming from the top of their lungs that you have an inverse head and shoulders on this, which, on the intraday chart, you do. Here's the chart that really makes me concerned. You liquidated all of the price action for the last 6 weeks. 1, 2, 3, 4, 5, 6. All of that has been liquidated. And what happened? You got a bearish reaction. That's typically not what you want to see. Here it is on the daily time frame. You liquidated it here. So this day would have looked really good had it closed up there. Because when you get over a main high like that, when those liquidations occur, you want to see it get bullish, right? Because that tells you that there's demand up there. You got breakout traders buying it, and there's a good chance that the market's switched back from that bearish sentiment, and now you can look for, the breakout to occur. You didn't get a breakout. You didn't get it. There it is, but then you closed under it. Bearish day, one final bullish push up above, taking out resistance, freaking everybody out, making everybody think that now the breakout's coming. But people were buying it right here. That's where everybody loaded up right there. And then again, when they got stopped out, they probably tried to buy it again right here. And they got stopped out again because boom, shakalaka, boom, shakalaka. It did have a very, very nice bounce day. And you didn't take out its bear market lows yet. This is your bear market low down here on Matic. So Matic is still up from the lows a good 197%. So do you want to be a buyer on Matic after it's already up 200%? Or do you want to look for an asset that's, say, like Bitcoin that's barely up? Good morning, baby. You know what I'm saying? Is it tradable? Oh, yeah, for sure. For sure, for sure. It took out yesterday's high and it's getting negative, right? It's getting a bearish reaction. So if you are a seller on Matic and you want to take a short entry, you would watch 95 cents. As long as you're not closing hourlies above this price right here, I believe you could see a pullback. But your primary profit target from entry here would have to be 93 cents. Secondary target would be, closer to the low of day at 93.01. So primary profit target, secondary. So if you get a stab back up to there, if it checks that for resistance, then you could take your short entry. It does look like this pattern. It's, it looks like it wants to try to break down a little bit, but I can't chase price. I can't take a short trade when it's right at the profit target. This has to be your profit target. Has to be, because this is the range the marketplace has set for you to trade in. What in the hell is going on? Ugh. Give me 1 second. I'm making a damn mess. Sorry about that. Anyways. All right. So there is Matic. All right. If I would be trading it kind of like Bitcoin as long as it's acting like Bitcoin. Very correlated to Bitcoin. So if Bitcoin finds a bottom or finds support, I expect this will too. Right? I expect it will too. Very volatile the last few weeks. Lots of movement happening. Fantastic opportunities across the board. Good point to short it. Yeah, if you want to short it, like I said, you have to watch that top price right there. Not so much this one, because you've already liquidated that swing high. That's yesterday's high. And you retested it here, and that's where the sellers loaded up, right? That's where you should have been looking for an entry, or here. So you would have to wait for price to come all the way back up to here before you could take the short trade. Like I said, the marketplace has already given you a range to operate in. I don't think you're going to see much lower prices than 88 cents down here. So at the very least, you could look for a daily open test, but I don't do that. Usually I just, like I said, I take trades in the range given to me by the market. So you're probably going to see a small bounce at least right there. But you would need it to get up to there first. This is the daily open, so that would be your profit objective. Not mine. Mine would be first here, secondary there. Just because I know how these things operate. Good morning, good day, good everything. Yeah, thank you guys so much. Do you treat the daily open for Bitcoin and the daily open for Forex the same? I do. And for stocks as well, because it is the same. It is the daily open. Yes. Yes, I do. Euro's up really good on the day, almost 0.7%, but it did have a pullback. I mean, once you got above parity, there's parity. This thing has been rocking and rolling. This is what a short squeeze looks like. This is the type of price action you want to see when you take out an old swing high, right? Okay, you got above that monthly high, and now you've just liquidated that monthly high. So now I would expect a slight pullback from here. Nothing major, just a pullback. You could potentially pull back all the way almost to parity. Down there. I don't think you will, but you could and still find support. But yeah, the daily open is the daily open. It is where a lot of traders operate. That's the importance of it. USD JPY buy at support. Absolutely not. I am short JR Rich. I am short USD JPY. I would not be looking to buy it. If you are looking to buy it, you are buying it based solely on for a bounce. There is the short entry on USD JPY. It gave you another opportunity to get short at weekly resistance right there. Right there. It gave you an opportunity to get short right here. I'm not saying this in hindsight. I called it out as the play happened. I took this entry live when we were live. I sold it right there. Boom. Boom, boom, boom. This was a very nice week. I've been sitting in this thing for a while, but you could have taken entries here. You could have taken a short entry there. Like I said, that's when I told people to get short. Anybody that wanted to offer or take a chance on getting in the top of USD/JPY, this will be your second chance. And that's where it rolled over. Boom, boom, boom. So this is the price that I was watching. I was going to close out more of the trade or take profits, if you will, if it didn't break down here. Because you could see how we tested support there, got a bullish bounce. The next day closed up. Then you got this day and then this. So on this day, or on this day right here, I said, if this thing does not close under this support, I'm going to cut the position in half because I need to protect some of those gains. But I'm in a winning position like this. I don't have to do anything. I can just leave it alone and let it build over time. Just consistently bring in more money. So I am in it with just under one lot short. So I wouldn't be, if you're looking to get long, like I said, it's based solely on, you're just looking for a bounce, right? Just looking for a bounce. There isn't even a technical level for it to be bouncing here. There probably is. I just don't know what it is. Well, there's the liquidation on the month, on that month's low. So next liquidation point on this is all the way down there. Will it happen? I doubt it. So yeah, I mean, you could theoretically take it for a bounce, but your profit target needs to be very small. Resistance is 139.971. So if you took along here or at daily support, this is your profit target. All right. Expecting it to break out and come all the way back up to here, I wouldn't. I would expect sideways and choppy, up and down in here. Give the moving average time to come down and caress price on down to lower prices. We took this trade based on BOJ intervention and based on a technical short on DXY. I've went over this trade blue billion times because people think that I just got lucky. People think that I was shorting it here. How much money did you lose on the way up? I didn't lose a single cent on the way up. Well, to be fair, I did lose a short trade over here. Got stopped out because of that. You know what I mean? And then I lost money somewhere else. I took 2 entries on it before I nailed this one. And this one way more than paid for those 2 losses. But we were looking for BOJ intervention. This was the first day they intervened. So once this occurred, we were then looking for this to be, this was our favorite asset for 2023 for lower prices. Our favorite. This is the one we liked more than anything else for a short. Because this one has been doing nothing but going straight freaking up. And this looks like a blow off top. But we were waiting on the DXY to liquidate its previous week's high. So on this wick, we were live. We were watching this right here. So essentially, as soon as we liquidated that right there, we took the short on DXY. I mean, on USD/JPY. And we also took the long on Bitcoin. On the same day, Friday, October the 21st, right? If I go back to USD/JPY, Friday, October 21st. So it's not lucky that I have probably one of the greatest entries in USD/JPY as far as for short positions. It's skill. I don't get lucky. Luck is when it happens once in a blue moon. When you can do it consistently, it's no longer luck. But yeah, if you are looking longs, then like I said, I wouldn't look for very much. I wouldn't expect it to go back up. This looks like a blow off top to me, right? Here is the first move that didn't look blow offy. This was a pullback. This is just investors getting involved with the short trade. Everybody else did the same thing that I did. Exactly the same thing, because look at the reaction you got from that. You never even came back and retested it. But this week right here, boom. So with the week that we're currently on, you have liquidated a lot of bullish weeks, right? A lot of them. You liquidated here. So you've liquidated 9 weeks of price action on this move lower. Right? Lots of stuff. So I wouldn't be looking for bullish entries on this. I would be waiting for the pullback to get short again. A lot of people is going to say that this is a fair value gap or an inefficiency or whatever, and they're going to be looking for prices to trade all the way back up there. I promise you that I wouldn't be expecting that at all. Right? I wouldn't be expecting that at all. There's a reason the market repriced all the way down to here. I could see a pullback to the midpoint, but anything other than that is just expecting the market to do something. But you can make entries inside of this weekly candle because that is your range. That's a big range. That's a big repricing. Lots and lots of people are selling this because the BOJ did. The BOJ said they're going to sell dollars and buy bonds. They need to put a support under their asset. And they did it. They did it. Here it is on the currency futures. Look at that. Lots of volatility here. Yeah, it does still look like an overall downtrend, but like I said, this is the same for Bitcoin. You should have shorted at the beginning of the year or in March, not now. Not on this. On this, you should have been looking for longs. Q4, you got a new quarter, you got all kinds of stuff. End of the year quarter at that. It was it was a perfect setup. Beautiful setup. Absolutely stunning. Absolutely love it. This was our next one that we're kind of watching for that short entry. I was watching it yesterday. It looks like, or a couple days ago, it looks like it ultimately played out. I was unable to capitalize on it, obviously. But we were watching this. And so far that's played out. So you got a nice move lower on the week. Today is Tuesday, so a lot of these things could be finding your weekly high or weekly low. So, I mean, that's true. This could be the weekly high on Bitcoin. If you want to short it because you think it is going to be the weekly high, do what I said. Wait for resistance. Wait for a retest of 16,997. That is also very close to the $17,000 big figure. That's a very good place to watch for short entries. If you get a retest of that, then you can look for short entries if you think this is the weekly high. If you think it's the weekly high. It is Tuesday. Does XLF break through resistance? That is the financial sector. I don't know. You just said resistance. You didn't give me an exact price. So I'm not sure what resistance you're referring to. This was the resistance. There was the breakout. There's the bearish reaction. Here's a retest of resistance now. So I wouldn't be looking for it longs today. I'd wait till prices get back down at $35, or you could even see a pullback all the way down to $33.89. But I wouldn't be buying it expecting that, because you're doing something as well. You liquidated this swing high, and you're getting a bearish reaction. That's where the sellers are, right there. It doesn't mean it will go lower just because sellers are there. It's just, I would probably be waiting for a pullback here. You're trading very far away from your 21. You got to think of these things as, you know, they ebb and flow. They don't just go straight up in one direction or straight down. They ebb and flow. They move up, they move down. They move up, they move down. Move up, move down. You've been only going up since, you know, then. You've just been one direction, up. So a pullback is probably inevitable. Let it catch back up to the 21 exponential moving average before you look for long entries if you want. All right. Not up here, man. Please don't be buying tops, guys. It is the top, right? You know it's the top because that's the top. And you liquidated it and you got a bearish reaction yesterday. That's yesterday's price action. You gapped up this morning to supply. If anything, I would have been looking for a short there. I would have been looking for a short right here. There's no really good downside target other than that day's low, which is 35.33, but I definitely wouldn't be trying to buy it at resistance. All right. I already looked at, oh, no, I did not look at ADA. I almost lied to you. We looked at Solana. ADA, doing the same thing Bitcoin did ultimately. Went down, liquidated its bear market low. But this thing has been in an obvious downtrend. It wasn't doing what Bitcoin did, right? Bitcoin was holding at support, holding at support, holding at support. This was just breaking down, breaking down, breaking down. So that would have been an entry for me, right? A bearish entry. Would have been anywhere up in there. This would have been the first place that I would have looked for those short entries. Then there. And that's ultimately where it fell from. So as long as you're trading on, I have a rule. As long as you're trading under the 21 exponential and under the 50 on the RSI, then you should be looking for shorts. The only reason that I'm looking for longs on Bitcoin is because I think it's getting pretty damn close to the low. Right? If it isn't already made the low, it's going to soon. I might just buy it on January the 1st, just for the hell of it. All right. But I don't like a short, but you can, right? You can look for shorts as long as you're trading under this. This is a trending indicator. So if it is trending, which it is in the direction, then that's typically the direction you want to look for trades. Up here, you got above it, right? So people are looking to get long here. The problem is this day right there is when all the shit hit the fan with FTX. Like I'm said, if FTX didn't happen, I can make the argument that this would be trading up around $48 right now. Up in here, looking for a pullback like everything else is. But it did happen. So that's the price action we got. So now you got to ask yourself, will this become correlated with the SPOOs again? I think so. Yeah, it's a risk on asset. It is the riskiest of asset classes. So I think it will. I think you will end up getting that correlation back. And like I said, you got a ways to go to get it back. So yeah, I don't think that I'm gonna look for the short. I don't think I mean you could. We could just look to take it just based solely on that this could be the weekly high. Because we don't have any more news coming out today. It's just, man, that's such a small weekly range. I would have much rather seen a retest of at least old support. Around 18,765 or the midpoint of this. I'd say you tested the 2% retracement, whatever that thing is, the 236 or 382 or whatever. I don't know what it is because I don't use it. The 236. Yeah. I don't use the 236. The only thing I use is these three right there. That's it. I don't care about any deeper corrections than or shallower corrections than that. Does it happen? Yes, it freaking does. It does quite often. In trends, you get very small ranges like that, and then boom, see ya. But Bitcoin didn't really liquidate nothing. Bitcoin's trading inside of yesterday's range. It doesn't have to liquidate these swing highs. It could just roll over from there. So just watch daily or intraday resistance right there. If you want to be short, that's where you're looking for your short entry. An hourly close above this price means you stop. Goldman Sachs. So watch that price. Let me pull up Goldman Sachs for Brian. I he sold and sold, so I think he's taking a short entry here. I don't know how to read the application on the phone as good as I can the actual platform for Thinkorswim. It looks like you sold and bought. Are you doing a fill or is that just a trade? You sold and then bought, like a short scalp or something. I don't know if I'd be looking to short this right now. It is strong, but you did test weekly res. Not quite, but you got it right there. Last week, very bullish. That is a breakout. When you take out the swing high and then you close strong above it, and then the very next week you get more upside continuation. That is the short squeeze. That's what we were looking for to happen on Bitcoin. And it did not. That's why last week we had a bearish bias on Bitcoin. Excuse me. Give me 1 second. Sorry about that. I had to take care of something. All right. So, yeah, I don't know if I would necessarily be looking at short Goldman Sachs. It is coming into resistance, so I would probably give it a day or so to figure it out. Right? Let price figure out what it wants to do. If it wants to hold as resistance, then take the short position. He just said I shorted it when it hit 389. Beautiful. By purchasing a put, then I sold it a few minutes later. It's still going down. Intraday. Yeah, I mean it's going down, but so right here is when he shorted it. At 389 to 387, that's a $2 gain on the put. So that is alpha. That is alpha. That is profits. Yeah, that's not bad. That's good trading. Yeah, see what happens. If you'd have bought two of them, you could have sold one and left the other one on. You might have. It just says upput. It doesn't mean that he only bought one. He's got a rather large account. Rather large. Doing good. All right. Yeah. Morning, dudes. Morning, dude. Big boozer. A man after my only heart. A man after my own heart, right? I like to drink myself. My health dictates I should stop, though. right? Um, GS. Oh yeah, I see you in the chat now. Took 4 minutes. Nice. That's good stuff. I love it when a trade works out that quickly. Any play on SPY or SPX? Thanks. Um, let's look at it. It had a nice move up, but you can see here's your open. Yeah, I mean, if this is going to be the high of day, what time is it? It's 10:22. So we're getting closer and closer to either having the low of day or the high of day. A nice gap up, and you're trading under the open. Yeah, I think you could see a short move here. Maybe for a scalp. Pre-market resistance is there, but you haven't even tagged that here. I mean, just look at this nonsense yesterday. It did the same thing. You opened, went up, then you came down, set the low of day, then you came up, set the high of day, then you went back down, then you came back up. I mean, it's hard trading. You got to be quick on the draw. If in here it did the same exact thing. Down, up, down, up. So I would probably watch this little area here. If you close a 5-minute candle above it, then I would be very cautious about holding on to any short trade. Right? So for me, that would be selling a call. I mean, selling a put at $401. Let's bring it up. Not selling a put. Sorry, you'd be buying a put. And you would want to do that at least 2 weeks out. So roughly 14 days from now. That would be the 29th of November's expiration. And do we have any? Well, we want 401.50s. We don't. These are single dollar amount strikes. So what we would have to do is we would have to buy like one at 402, or you can buy it at 401 just out of the money. And then if it drops down here, right, you got 401.55. So I would want it to roll over here at 401.63. So that would be buying a 402 strike put. That's just barely in the money, where you could buy a 401 strike put out of the money. And then if you get just down to $3.99, that's a couple dollars on the return. A couple bucks will only, you can see that you're going to pay like $5.50 for the put. Yeah, the spread is very narrow on this, $5.53, $5.51. So you're going to pay the ask price at $5.52. Getting in the money by a couple strikes means you'll make roughly a little less than $1 on it. But the further you go down, obviously, the better it will be, because these things really start getting in the money $10 away. It's just like, that's how you could play it. You're getting in there now. That's right where I'd want to see it stop. I would not want to see a 5-minute candle close up above that. So this is where I would be taking the entry. And then, if you get above 402, start to rip, then you can sell it back for a small loss. But generally, rule of thumb is you want to trade this the same way that you trade any other account. You only want to risk 1% of your position. So you would have to have at least a $50,000 account just to be able to risk that put. and you would be risking the total put, the total amount that you purchased the put for, right? That's your risk. So you would essentially need that thing to drop really big in order to make a 2-to-1 risk to reward. In order to make 600, or what, if it's 500 for the put, you need to sell it for $1,000 to be 2-to-1 risk to reward. You would need it to drop 10 to 15 bucks for that. So it'd have to be down in here. But you don't have to risk the entire premium. You can always close the position down for a small loss. Most people buy options for YOLO plays. But you gotta have like $25,000 in the account before you can even short assets and stuff like that. It's easier for people to play with options, but 99% or 90% of options expire worthless. So keep that in mind. Heath, I've been interested in using these strategies to trade stocks, but just not sure how you manage risk for overnight price swings. Maybe that's why you use options. Yeah, I mean, you can't, right? I can't. So like in that, if Monday would have happened and it would have gapped way up, then even if you have a stop loss out, since the market is closed, like on USO, I'll go back there for a second. We'll keep it here. We'll just use this for an example. So like if you would have sold here, say the market gaps up over the weekend way up here, well, that's where you're going to get executed on your stop loss. So if you have a stop loss out, right, like right above this, and you take the short, and if you gap up upon the market open, that's the price where you're going to get filled. So, yeah, you do have to assume that risk over the weekends and overnights because you can't close out option positions after hours. Well, my broker don't allow me to. TD Ameritrade will not allow me to close an option position. Well, we can take this trade right here. This looks good. We can look for the short trade on the SPOOs. Is Bitcoin retesting resistance? Not quite. That's the resistance we want to see Bitcoin retest. So that would be the short entry there. Let's pull the SPY up over here. This might be you're above the open, so we got to give it just a second. That 5-minute level. Like I said, I would rather than be around daily levels. You're slightly above the daily, but you closed under it. So yeah. This is your high of day on the SPY. It's not the high of day on the SPX. SPX high of day is going to be closer to that. Right, there's your high of day on it. But this would be it, right? That's the entry for the short. Right here's the entry for Bitcoin short. So we might get a play here. Let's see what happens. Let's see where the SPY is in regards to its let me get over on the small account. No, let's just leave it alone. Let's see where is here. Let's see here. Where is the SPY in regards to its weekly expected move? So this is the weekly expected move that the options market is priced in. You're just barely trading above the open. The black line is the open of the week. Or it's the close of last week. No, it's not. Yes, it is. It's the close of last week. So you already had a pullback day yesterday on the SPY and you gapped up today. So you're currently trading above yesterday's high. So the short trade, in my opinion, is probably not the best trade to take here, because you are gapping up above yesterday's high. You're still trading well above yesterday's high on this. Boom, 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 boom. This could be a fake out move. It absolutely could. But you see what I'm saying? Like you still got a ways to go before you're even up where the option market is priced in the top of the move. Like the option market says, here is where they expect it to go, plus or minus, right? Plus or minus. I can't see the numbers. Let's see. They were expecting what? Let's get it close. It doesn't have to be exact. 398 to 407. So it's not a very big move, right? $9 up or down is what they were pricing in for the entire week. Since you're in the middle of the range and gapping up above yesterday's high, treating it as support, taking the short just based off of this little tiny 5-minute candle is probably not the best trade. But we can watch Bitcoin at resistance. All right, so what is going on here? All right, I see what's going on. All right, so I'm pulling this up. I want to see here. I got to get some of these lines off the chart. The price on Bitget, we use Bitget, the exchange Bitget, because it has the cheapest fees than anybody in the crypto world. And they're better on, it's better for intraday traders, right? Because you're taking multiple positions per week, potentially. So the cheapest fees are better. They also offer no KYC. If you want to trade on Bitget, please understand, when these exchanges collapse, others can follow, right? So you're going to risk money. If you want to trade crypto, then you're going to be risking money. So whatever you can afford to risk, that's what I would put on exchange. You can trade up to 125x leverage on Bitget. So you don't need to put $1 million on exchange to make a good living. You can put just a little bit of money on the exchange, use a lot of leverage, and make the same money. And you're only risking a little bit, right? But anyways, if you do want to do that, there is a link in the description. Please use referral code XTSC as X-Ray Tango Sierra Charlie. Man, I really don't want to. I would have to close out my short position that I already have on Bitcoin to take a short today. Which one do I want to trade? Do I want to trade Bitcoin or do I want to trade the SPY? Decisions. Just looking for a small pullback, right? Let's do the SPY. Because I don't want to close out my short on Bitcoin, even though price is moving higher. If I would have, it's going to screw up my cost basis if just by taking the entry. But that hourly res on Bitget is $17,007. $17,007. So right here's the short entry. You're going to risk the top of the day, the high of day. All right. So right here is where you'd be looking to take that short entry. let me just close the position. I mean, it's well in the money. All right. No positions open. All right, so we're going to take a short trade here. We're going to risk the high of day, which is this wick. So to set the trade up, if I can do this in time, is this. But let me get in there first. All right, so this is what we're risking. High of day. We want at least 2, so let's see if this matches up with any support. It does perfectly. There is support. So it's a perfect 2-to-1 risk to reward from here to down there. All right. All right. So entry, I'm already entry. I already entered it. And I'm risking 17,112 as, my stop loss. We get up there, I'll be stopped out. And then if it does indeed roll over here, you got 21 minutes on the close. So if you want to play it safer, you can wait for the close. Because if you close above it, that would negate the trade. All right. If you close above it, that would negate the trade. So we'll see here what happens. An hourly close above scraps the trade. All right. Thank you, Heath. You're welcome, Chris. The time-wise, I like buying in late December too. Price-wise, I'm looking for lower. Makes sense. Makes sense. It definitely makes sense. The SPY is dropping. The SPY is falling. The SPY is falling. It's a little not funny, right? We don't care so much about 5-minute closures above that level. It's hourly closes above that level that would have us exiting the position. Because it's an hourly level, right? How much you risk on this trade, if you take the trade, it shouldn't be more than 2% of whatever you have in your account. But if you have, like I said, if you use the link for Bitget's exchange and you have, say, $100,000 account and you just keep $1,000 on exchange, because $1,000 of 100 grand is a 1% risk, you could just put that $1,000 on exchange and trade it. So that way, if you take a trade with a lot of leverage and you blow the $1,000, guess what? You've only risked 1% on your total equity, which is good. That's what you want to do. Bitcoin could make a run above the high of day also before rolling over. We have seen that happen many times where it takes up, runs above the high, and then goes lower. That's what it did yesterday. But yesterday it was much more aggressive above the high. So we missed out on the short up here. We ultimately did take a short on it here. And we took profits, down here. So it was a profitable trade for us. It looks like it wants to reach above the high of day. So you could wait on that, right? Let it do that first and then look to take that short entry. Or you can wait for price to get back under here, take the short entry. There's different ways you can approach it. And that is up to you. I can't tell you what to do. I can tell you what I do, but I can't tell you what to do, right? So I went ahead and closed out the position. I'm gonna let it run above the high first, and then see if it gets a bearish reaction. This isn't a very good reaction for me either. It is nice, but I don't like the close in it. Like typically when these levels get tested, I want to see them act perfectly and roll over. But Bitcoin looks like it's going up here to run above the high. The SPOOs can roll over because its high is up around $4,042. That's a $50 move just to run above the high. Euro USD is coming off, so that's good. That means the dollar is going up. So that will likely put sell pressure on Bitcoin. It just looks like it wants to go above the high. It does not mean it will, though. Setting a stop loss, like when you take the entry, like if you were to take the entry now and you just want to say, well, I'll just set a stop loss a little bit higher, so that way it gives it room to liquidate the high and then roll over. You can do that too. It's just almost impossible to figure out how high it's going to go. With the previous day's high right just above that, you could see a wick all the way up there and then a drop. And then there's nothing that says that it has to drop. Right? It could absolutely be a bullish day. And if it's going to be a bullish day, then it doesn't matter if it runs the high or not. It's still an inside day. You're still trading inside of yesterday's range. It is a nice bullish day. And it is getting late in the day to be looking for trade entries. At 11 o'clock, this either the high or low will likely be in. It doesn't happen all the time that at 11 o'clock your high or low is in on the stock market, but it happens more times than it doesn't. It happens a lot. All right. Just giving it a second here. If what I would want to see also is it take that high out and then instantly roll over. I don't want to see it lollygag up above the high because it is a bullish day. I can just see the sellers diving in this thing right now, though. Not really. See how there's hardly no volume nodes up here? This looks like it's going to be a bullish day, but we'll see. That don't always mean nothing, but I would much rather see big volume nodes coming in at the top of the daily range to kind of coincide with the same bias as mine, right? I think it's going to go lower. I want to see volume show me at least that other people are thinking the same thing. But we typically are the contrarians, meaning we like to take the opposite position as retail. And getting short all the way down here is not the best. Not the best play to make for continuation. I just don't think there is much continuation left to the downside for Bitcoin. We got 13 minutes left on the close. Should have took the SPY trade. It's not really moved, right? That's not much profit from there to there. That's why I like Bitcoin better. It's got an actual 2-to-1 setup here. 12 minutes on the close. And the SPY, let's check its volume. Profile's up around the high. There's the profile right there. Point of control, sorry. Getting back under the hourly res there. That's good. I want to see it under. I want to see it stay under. I don't want to see it playing around up in here. Now, maybe one could just risk this swing. If it's going to drop, which it looks like it wants to, because you're about to make a fresh low of day. Investors will also know that. They also know the same stuff that I know, right? 11 o'clock, usually the higher lows in for the stock market. Not always, but often. That will encourage more selling too. Damn, man. Right at the low of day. Look at that point of control. Boom. People were buying that up. So it's dropping down here. Let's see if Bitcoin will ultimately. Let's get rid of the moving average. Don't ever worry about the moving average on my chart on an intraday because I don't care about moving averages on an intraday basis. I only care about them on the daily time frame. So that's a good close there on Bitcoin. Looked like it was going to make a run up to the high and it didn't. Not yet, anyways. We can't see into the future. That's not what trading is about. Trading is about taking high probable entries and managing risk. That's what trading's about. When you're wrong, you want to be small loss, small loss, small loss. Will Azerst, I'm cycling through mountains listening to this. What a combo. Nice. Late to the stream, short at 1711 though. Good job, Drew. We're looking for a short too. You're on the right side of my bias. It doesn't mean I'm on the right side of the market. You just made a fresh daily low on the SPY. What we don't want to see now is we don't want to see a big bullish rip. We want to see this hourly res continue to hold as resistance and then price start to slowly drift away. That profit target on Bitget is 16,765. 17,765. So it's a little bit higher than this, but that's just because the candles aren't exactly the same. They're pretty close, though. That's where you want to take profits. Then you can move your stop to break even, and then if you get downside continuation, you'll be in the best position possible. For anybody that's just joining the stream, it's highly unlikely that anybody is just joining. But we're watching hourly resistance here on Bitcoin. We have taken an entry. We are risking the high of day to see if we can get here first. Essentially, that's all we're doing, right? This is our trade setup. Stop $17,113. Entry is 16,000. It's right at $17,000. The entry. And then to take profit, number one is going to be 16,749. 16,749. We got exactly 6 minutes and 31 seconds left on this hourly close. So what we are going to do is, if we close an hourly, since it's 11 o'clock, it's late in the day to be taking a trade. But we didn't get a trade on Thursday, so I try to do this on the, at least for the public stream, try to get at least one trade in. So if we close above this, we're going to shut down our positions, right? Because that means that price is showing us a willingness to trade higher. And by closing above this, that also means that you make a new range higher than resistance. It is possible that that could be a trap, and in the next hour you dump, but it's not likely, because this is a late trade. It's very late in the day to be looking for trade entries. Usually you already want to be in a position, and according to volume and according to the candles, the trade was to the upside. The trade was buying yesterday's open. That was the trade to take. So right now we're betting that the market's going to roll over. But see, what I said is, we did not want to see the SPOOs or the SPY make a fresh daily low and then get a bullish reaction. We didn't want to see that. We want to see continuation when we break under these liquidity pools, not a retracement. All right, so we can watch the 5-minute time frame now, because we know that there's 4 minutes left. So wherever this 5-minute candle closes, that will be the hourly close. Above this white line scraps our trade. Below the white line, we can still hold it. It does not mean the trade will still work. It just means we can still hold it. What is this line? That is the daily open. All right. We want to see resistance hold here, naturally. We're just biding our time here, waiting for it to happen. We are getting the breakdown on this, right? This is inverse to the dollar. So this is good for us. But the correlations don't always work, because these two assets are not correlated. But usually, you know, the Bitcoin will do opposite to what the dollar does. Not always, because last week we had Bitcoin crashing and dollar crashing as well. But that was a massive fundamental reason, because FTX was liquidating their Bitcoins. Takes time for these things to work out. when we take entries, we always want price to go immediately to our profit target. That's normal, natural. But if you're scared to eat a stop, you're risking too much money. You should never be afraid to take an entry. Unless you've already taken several entries today and lost several monies today, then you should be very scared. But that's not how you do this. You wait for the one setup. Take it. If you're right, you make money. If you're wrong, you lose money. And we're just waiting. 1 minute 30 on the close. I don't like that it's just hanging around that level. I would much rather see it start to trade away from it pretty damn soon. Very choppy and sideways on the SPY this morning. After the news spike, that big 5-minute green candle is from the news, the PPI number. So essentially, we'd like to see at least that get retraced. This is your news right there. Our profit target is just a little bit under these swing lows, but its hourly support is where our profit target is. It's the lowest one. See how you broke down and closed lower than that? That's a trap. So, I mean, it's not the best setup in the world. I like that close, but it's still just not the best setup. So the daily open on the SPOOs is holding, or on the SPY is holding as resistance. That's a nice thing to see. Bitcoin coming right back up for a retest of hourly res again. Why? Don't ask me. Yeah. In hindsight, we should have took the SPY trade because it's already pretty much, it's already moved a couple bucks. 402 down at 3.99. It's a $3 move. He would have made money on that. But I mean, I wouldn't have wanted to close it out that close to entry. This box says that this is your low of day down here, but it is not. This is your low of day because of the gap, the time difference, the closing. The open is all the way down here on this. We're just waiting, watching. I guess I could answer some questions. When long or short on Bitcoin? Johan, hopefully you're just joking because I mean we've been talking for the last hour about this setup right here. We've been talking about it since price was down here. Right? And that is clearly a short. What about altcoins? Where do you plan to buy time-wise? Pretty soon. Pretty soon. Because that's... Yeah, I mean, pretty soon. Because I think the low's pretty close to being in on Bitcoin. Let's get rid of the euro. Let's put Bitcoin over here as well. Because I want to keep the hourly up. I want to show you something. Wait, that's not right. This right here will cause problems for us. Damn it. Right there. That will cause problems. And the SPY is just, I mean, it's moving away. So this, in hindsight, we should have taken the SPY trade. But it's not moving either. It's not like, not yet anyways. Like this is a nice gain right through here, right? Just down, 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 down. Lovely, beautiful. When you're going down, but it's like sideways down, that's not very beautiful, not lovely. We like them to move in that straight line to our targets, but unfortunately, that's just not how price works all the time. Sometimes we take these entries and they work out quickly. Today doesn't appear to be one of those days. And like I said, I mean, this one could make the argument that this is setting up a bull flag, right? Up, in the 4 hours or the last 2 hours, you've went sideways. That's your flag. So this could cause problems because people could be buying it up here. What exchange is that? That is yuck. There, that's much better. Hey, that's why you're bouncing. See? That's why you're bouncing. Same for the SPY. You're just trading inside of that news candle. Wrong time, wrong setup, wrong everything. You're just trading sideways. Ultimately, it will figure out a direction, but it's just not doing what we want it to do. This is the point of control, so if you get underneath that, like if price could get down around here, you could see a rapid expansion lower then. It just depends on where they have their stops. I mean, and it's more heavily weighted to the buy side than the sell side. So if price were to get under that, stops will start flying out. That could, help force price lower. But as of right now, I mean, that support's holding. So we're just chopping inside of this small, tiny range. I'll give it to noon. If it doesn't start to make its move by noon, I will close the trade out. I'm not going to stay live till noon because we got live at 9:30. We've been live for an hour and 41 minutes. There wasn't a setup at the open. But I was kind of hoping that it would push. This down here is our profit target. But like I said, if we start closing 5-minute candles back up into this stuff over in here, you can exit the position. Just one of those days, right? Where it's not going to work out. It still might. I'm not saying to exit now. I'm just saying it's not doing what I want it to do. Neither one of them. Really. I mean, in hindsight, that would have been the nice trade. You could have made $3 or $4 or $3 at least on the put, which would have put you in the money by a few strikes. You could have definitely sold it for more than you bought it for, and that is what we try to do, right? Buy low, sell high. Once again, this moving average is on. The DXY had a nice move lower. It's already trading above the news spike. So since it's above the news spike, it should have ripped. It's liquidated it made a fresh daily high and rolled over. No, it didn't. Right there is the open. It's finding resistance at supply. It's finding resistance at supply. That's the open. So this wasn't a fresh daily high when it was just a liquidation of this swing high. So it wasn't a very much, otherwise it would have started to rip right there. You would think once you got above the news candle, because people just, take the short 5 minutes before the news, boom, that getting back above that would cause a rapid expansion. That wick low is this candle's low. So if we get under this 5-minute candle, then that means you will be under this support. Then you got this area here, 1680, 865. That could cause trouble. It's not the best setup. Not the best. I wonder why price is so gloomy today. The dollar's not. The dollar's moving. That's a big move on the dollar. You're up almost 1%. You're not up 1% on the day, but from swing low to where price is right now is almost 1%. This isn't doing anything compared to what the dollar did. The SPY, to be fair, did have a nice expansion pre-market, but still, it's not really here's your open. And it is 11:11. So right now we know that there's a 60%, it's higher than that. It's 68% chance that the high or low is in. And this candle is 11 o'clock candle. So this candle could be the low. If we make a fresh high, then we'll know that was the low. But I was hoping it was the opposite. I was hoping that the high was in. Notice sometimes you refer to day open at around 20. Yeah, it's different now for Americans. Now it's 1900 hours. At 0H100, it confuses me. I don't know what 0H00 H00 is, RB. But The daily open happens the same time every day, every single day. It used to be 2000 hours. That's 8 p.m. Eastern Standard Time. Now it's different because we had time change in America. So now the open is the 1900 hours. This is your daily open on Bitcoin. Right there. That's the daily open. So there you go. It happens the same time every single day. Now, I don't know where you live in the world, so naturally that time is going to be different. Like if you live in Asia, naturally it's not going to be 8 p.m. Eastern Standard Time for you or whatever your time is. So you just have to figure out what time is the open. All you have to do is put on the daily candle, and right there it tells you how many hours are left. So you can figure out what time it is in your own time, but for me, it's at, or it used to be at 8 p.m. Eastern Standard Time. Since it's 1900 hours now, that means it will be 7 p.m. Eastern Standard Time when Bitcoin closes. And the Forex market's the same way. They close at 5 p.m. Eastern Standard Time. So that means the new daily candle opens at 5 p.m. Eastern Standard Time. That is 1700 hours for me. That always change. That doesn't change with daylight savings time. It's always the same. It's always 5 p.m. I don't know why Bitcoin is different, but it is, because now and it had me all screwed up, because when I'm looking for the daily open, I'm not looking for it here. I'm looking for it on the intraday chart. So like it looks like a big, strong, bullish day, doesn't it? Here, looks like a decent day. But here is your daily range. That is not a very big up day. So, I mean, today's whole range has just been bloop, ba-doop, 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 slowly moving higher. All right, slowly moving higher today. That's the open. You opened, you put in a low day, up. So just being a very slow moving asset today. So is the SPY. Look at this. This is your entire daily range here on the SPY. But for the first hour, an hour and a half, you haven't went anywhere. Nowhere. And Bitcoin is back above our resistance. This is not what I wanted to see. So now a position that was into profit down here is now in the red. Bitcoin is trading at the high of day. The SPY is trading at the low of day. It just, pisses me off. It isn't going to work, more than likely. The fact that you came down here, tagged support, you've only went one direction since that, and that's been up. Yeah, I don't like it at all. This was a trap candle. We shouldn't have taken the long position because of this candle right here. This candle was a trap. You broke down below support, right? You broke down, closed under it. But once you got above this high, right there, once you got above that, that pretty much cemented this into a trap. So and you went up. This close here was inside of this range, this candle's range. This candle closed under resistance, but look where it found support, right there. It just doesn't look good. I wanted to see a rapid expansion lower down to my profit target, and it didn't happen. Life as a trader. You're going to win some, you're going to lose some. What ultimately is going to define whether or not you are good at this is how much do you lose when you lose. That's it. As long as you are losing less than you are making, you will be fine. And if you wait for high probable entries, like I said, this is a high probable entry. That just does not mean that the trade will work. Some people think when they hear high probable, that means every time they take the trade, it's going to work. No, that's not what it means at all. It just simply means that, it's a high probable area because price usually will sometimes, right, more often than not, respect those areas and roll over. And it did. It did respect it. It closed under here, and then on this candle, it traded down to there. We were stretching. We wanted it to trade down to there. It didn't. It traded right to there and reversed. Why did it reverse? Well, because the trend is up on the day. Everything says today you should have been looking for bullish entries. We were bullish yesterday. This is where I told people to buy yesterday. At the open. I only took this position because we were live and it was there, right? We wanted to see a retest of resistance and we got it. Now we're trading above it. So the short trade isn't the trade. It is just not going to work, it looks. The SPY, like I said, I didn't really like the way it opened either. It's trying to pull in the shorts, it looks to me, just so that way it can ram it right down everybody's throat. But I mean, technically, you've got gap fillage there. This, even though you opened way up here, this gap is filled because yesterday's high is there, today's low is there. You traded in, there's no gap there. The thing that I hated about it was that it gapped up above all these highs. Right? That means anybody that shorted yesterday or this day is now stuck. Price is trading above their entry. Right? This is called like a retest gap, if you will. Like it's coming back in, retest, and then go. The psychology behind it is, as the reason it's red right now is because of when it opened, all the stops from here and here were getting triggered on the open. Because people usually just put their stops right above the highs. Just right above. So anybody that got short yesterday, their stop was right there. So the fact that you open above that instantly means that a bunch of sell side orders are coming into the market. Because, well, no, they're buy orders, right? If you're stopping out shorts, you would be buying. The market comes in for a retest of it and then goes. It just gapped up. It's not doing anything yet. It's still chewing through those orders. The lower high is in. Here's the low. There's the high. That's your entire daily range from there to there. 402, the $3.99, a $4 range. Not beautiful, right? It's not beautiful. For a short setup, this is where we were looking for the short setup. It did trade away. It did make a new low of day even. But we just can't get Bitcoin to do the same thing. It still may work out. I don't know where you guys have your stops, right? Mine's above the high of day. So if it gets up there, I'll be stopped out. It just doesn't look like it's going to work at this point in time. Let's see the 30-minute here. Yeah, see the 30-minute is also, this is also resistance for it. That's your highest 30-minute close. You got above it there, and then you closed under it. You got 6 minutes. So we'll give it this 6 minutes to see, does this close above? A close above, I'm closing the trade. Because you can see the direction the market's pushing, right? Down, up. This is the hourly close. Tested this right there and up. So you came into it, boom, a little lower than it, but still. And then next candle, next candle, next candle. So that's your retrace. Your expansion looks like it wants to be up. And there's not a lot of sellers coming in either at these high prices. So what I mean by that, let's turn the numbers off. What I mean by that is these volume nodes. I use volume profile because it uses volume. It's volume by price, not volume by time. Volume by price. The volume on the bottom is volume by time. We care about price, not time. We don't give a shit about time usually. We mainly care about price. If there were shorts coming in at the high, this is your high of day. So anywhere up in here, these volume nodes would be getting bigger and bigger and bigger. And then ultimately your point of control would shift up to there. That would be suggestive that short sellers are indeed coming in up here. It just helps give you that little bit more, security, if you will, into your position itself. But we don't have that volume coming in up here. The majority of the volume for today traded here. So here was your newsprint. Then you came down right to there. Then that's when all the buyers stepped up. Then you put your highest volume node right there. So that's the price that most of the volume traded at. You can see this like down here. When it was trading down here, this was your range right here, was your daily range at this point in time. No, up here, sorry. So from here to here was your range. You can see how this spike of volume came in, boom. So at that point in the day, that would have been the volume control, point of control right there. You can see how it's at the bottom of the range. I would like to see something like that happening up here, and it's not. It's not happening. That's why we like the closes. The closes reveal everything to us. We are traders. We trade inside the range. So, for instance, here would have been this range right there, right? From here to here, that's your high probable area of operation. Upon this close right here, that would have told you that price is looking to trade higher. Then you retested this range right there like a ladder, right? You broke out above this range, retest, retest. Now you're trading away from it. That's what candlesticks give us. That's how we see, we know where the high probable areas are. This is now the high probable area. So either until you close above that or close below here will dictate future direction. This phenomenon is also called choppy price action. That's nice. That's what we like to see. Give us a little bit of fear, trying to shake me out. I got balls of steel. You can't shake me out. No, I'm just kidding. I don't have balls of steel. I'm not risking a lot of money, so I don't care if I eat a stop or not. I'd rather not eat a stop, naturally. Who wants to get stopped out? Nobody wants to get stopped out, ever. We always want to make money. I still have difficulty defining the daily high and low. What time frames and how to spot them? Okay, so, Ellie, we're day traders. So that means we are operating inside of the day. I hope you're still here, right? We are operating inside of the daily range, okay? So your daily high, your daily low, your daily close, your daily opens, all those are very crucial data points for us because we're trying to take a trade inside of that range. So inside of this day, I mean, if you just look at the daily candle, no matter what time, you're going to see the current daily high, daily low. The daily open will never change, ever. This cannot change. Where it opens is set in stone for all of eternity. No matter when you look back on this asset, no matter what the high or the low is yet, the open will always be 16,582. Always, 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 because that's what price it opened at. All right. So as a day trader, all we're doing is we're trying to find an entry inside of this candle. We don't care about this candle, none of these candles we don't care about. We only care about this one today. That is it. So when you drop down into smaller time frames, the 4 hour, the 2 hour, 1 hour, 30 minute, etc., we're still just focused on this range. All right? We're still only focused on where is the current daily low, where is the current daily high, and where is the open. That's it. Right there is the current daily low. Right there is the current daily high. Now, we know that it's choppy today because it's still trading inside of yesterday's range. Yesterday's high is up there. Yesterday's low is down there. You are above yesterday's close, which, tells you that for now it is bullish. You're green. That means you're up above the open. A red candle means it's below the open. So the open is the pivot point of the daily range just today. If we're above it, we're bullish. If we're below it, we're bearish. Right now, price is bullish currently. But something can happen and it could end up closing down here. Then that means it will close red with a big wick on top of it. So when we're using these points to help guide our bias. So here is your daily range. I wish I could delete everything from this point over. I wish I could just show you this group of candles. This is your daily range. This is your daily low, which was made at the open. And then price traded away. Here's a retest of the open. Not a perfect retest, but close enough. And then away. So you're bullish today. So looking for shorts is ill-advised. A good short setup would be price opened here, traded up, set in a high of day, and then rolled over, and then came down here, right? So now that means would be down here somewhere. On a perfect short setup, we would want to see price trade back up to the open and then roll over, right? And then we are trying to capitalize on that. We're looking to take an entry here, and we're expecting price to roll over. When you take a short like I did here today, what you're essentially doing is, A, you're going against the trend for the day. The day's trend is up. So you're trying to pick a top. You're fighting against the daily direction, which is up, right? It's ill-advised. It's ill-advised. I do not advise you ever take liquidity break trades. Those typically work better on high-risk news events because we know the market will tend to go liquidate the daily low or liquidate the daily high and then go the opposite direction. When you have a standard normal trading day like we have today, trying to short the high of day is not going to work out as often as getting long at the daily open, for instance. Like right now, the reason that this trade is not working for us is because we are trying to inflict our will upon the market. We're trying to say, I think it's going to go over here, roll over here. Why? Because I said so. That's why. There has to be a technical reason. There really wasn't, right? There really wasn't. The reason we took the trade is because it was getting late in the session and we just wanted to take a trade. That's the reason. And that's also why this thing isn't working. The liquidations, when you get above the daily high, this right here is the daily high. So this is going to be the bullish target. Anybody that got long down here, this is their target. And they are more than likely still holding the position because it hasn't been hit yet. So when it does trade up and hit that, the reason that sometimes you get a bearish reaction is because everybody that was long going into it are now taking profits. So when you get that slight move above the daily high and then you drop back under, that is called profit taking. That is when people are exiting their profit position. They're taking off all their profits. They're exiting the market. That's why you will get a bearish reaction at the high of day sometimes, right? This is not a bearish reaction. I have no clue why I took this trade. I was bullish. I am bullish. I think I do it because I'm just trying to get the trade in because people come to watch the live streams for that trade opportunity. That sometimes I force entries. This should have never been taken. Even if it is holding under resistance, it shouldn't have been taken. All right, look at the SPY now. Now you're green on the day. You remember how we looked at the daily candle and it was red? As long as you're above $401.17 or 15 cents, you're going to be green on the day. So you're back above the open. That's not good. Not typically, not for shorts. All right? So All we're doing is we're just trying to operate inside of this. And then when you go lower into the lower time frames, you can see the levels that the marketplace has already deemed operating ranges. So like this is your daily open. When this candle closed here, this then became the range of operation in between these two white lines. This is where you should have been looking for entries. You should have been a buyer here and a seller there. Now, that doesn't matter what side of the trade you're taking. You buy here, you sell there. No matter what. Always. Even if you're just taking a short, you're selling here, then you're buying there. Right? That's the market's range. Then here, you got to close above and a higher high. There's your high. There's a higher high. There's a close above. Boom. Next hour, you got continuation there. Boom. Then you drop down here. So now this and this becomes the range of operation, right? So all positions that were being taken through here, you're buying here, you're selling there. Or you're selling there and you're buying here. It doesn't matter if you're long or short. This is the operating range. This right here told shorts they were wrong again. Remember, this one right here told shorts they were wrong already today. That told them that they were wrong. So now this becomes the range. This candle here tells shorts they're wrong again. You closed above. See that? That's how the market works. It finds these high probable areas and it bounces around inside of them until equilibrium is broken, until there is more supply or demand. More demand, market goes up. More supply, market goes down. Or no matter what, even if it ain't buying and selling that pushes the market up or down, the market is still in search for demand and supply. So when it's tapping down into the bottom edge of the range here, right, it's finding demand. Then it trades away because it's looking for supply up here, higher, just wherever. When it finds supply, enough of it, it will set in a new range, and then the market will bounce back and forth inside of that range until either A, supply is met or demand is met, whatever. We don't know. Like, we can never know what's going to happen into the future. Anything beyond this second, we do not know. I cannot, nobody in the world can tell you if price is going to go higher or lower. That's not what trading is about. Trading is not about me thinking that the market's going to go down and I was right. That is not what trading is about. Not. It is not. Because sometimes I take trades that are profitable and I'm on the wrong side of the market, because I will take my money, I will move my stop to break even, and an hour later I get stopped out and price starts trading well above my entry. So even though I was wrong on direction for that day, I still made money. Why? Because I take my entries at high probable areas. That's why. That's what trading is about. It's about learning to identify what is going on, where to take those entries, and managing your risk. That's trading. Nobody, like everybody on the freaking Twitter right now that's saying, I told you all, I told you it was going to go lower. I told you. We had a 50% chance of being right. That's like me pulling out a quarter in my pocket, flipping it, it lands on tails, and I said, see, I told you it was going to be tails. No shit, Sherlock. It's either only going to be heads or tails. Price is either only going to go up or down. So their whole position of I told you so is freaking moot. It doesn't even matter. Can you translate that into winning profits? Because if you can, then you can be a trader. You can change your life financially. It doesn't matter if you think the market's going to go up or not. Trading is about more than that. It's about you being savvy enough to get into the market with risk and getting out of the market with profit. Being right or wrong on direction doesn't matter. Doesn't matter. right now, the direction for Bitcoin is up. Not because I say it is, because the market says it is. So me as a trader, I must be able to identify at which areas inside of this marketplace, inside of this daily range, do I want to apply risk. But when I do that, I always go into it knowing that I will probably lose money. I don't go into the market with risk thinking, how much money can I make today? Never. Because I know I don't know. You know what I mean? I know that I do not know what price is going to do, ever. So I can't assume that I'm going to risk money and make it to make money. I can't assume it. But what I can do is by managing my risk over time, as long as I deploy the same consistent strategy over and over and over time, your results will tell you if you are profitable or not. It's that simple. And it has nothing with picking right direction. When I took the short on Bitcoin the other day, right there, this strategy gives me the ability to pick, literally top tick the market in some cases. And it's not because I know what's going to happen. No, it's because it was at a high probable technical level. That's why I took the short. Right here, at the very tip top of this wick, I shorted Bitcoin. Did I know it was going to go all the way down and do that? Hell no. No. In fact, if we go into this, I will show you. I had no clue what was going to happen. This is what I did. On the weekly, we had this level. This is called supply. All right? And on the daily, this is the open. Right there. All right? So I have two technical confluence levels at this price point. Right there. I have supply. I have the daily open. Going back into the 5-minute time frame, here is when I got short. Right there. Because of how this candle pushed up into the technical levels and dropped. Then I waited for this candle to get up higher than this candle, and I shorted it. Right there. Just as soon as it got above this, I market ordered in with a sell order. I put my stop above it. This right here was my profit target. Because I was assuming if the market rolls over here, it could likely get as low as this. Because that was the previous daily high. So I want to take profits and move my stop. I did not know anything. I did not know that the market's going to go lower. I do not know if this trade's going to work or not. I don't. I took the trade because it was at hourly resistance. That's it. That's the whole reason. Right? So, boom. And then we know what happens next, right? Right here on this candle, I had a limit order setting here to take profits. So when price pushed down here, and it was a significant gain, that's a $400 move right there because it was extremely volatile, moving very quickly. I made a lot of money there. So I exited the position and I moved my stop to break even. That's it. That is it. That's all I did. I had no idea that this was going to happen. Right? No idea. I've been doing this for a very long time, and you will be able to do this very same thing. It's just a set of skills. I know where these technical levels are, and I know the market respects them. Why? I have no clue, and I don't give a shit. I don't even care why. I just know it does. That's enough for me to execute a trade plan. That's enough for me. So there was my entry. Look at all that. So on this day, I could have posted, everybody lost a lot of money on this day. Most everybody lost money on this day, but not me. And not like 4 other people that follow me inside the Discord. They took the same entry as me because I told them no, because they know. They've been with me long enough now. Now they know what they're looking for. They took the same exact entry as me. We made money. So I could have went on Twitter and I could have been like, why y'all suck and you don't make no money and blah, blah, blah. I knew. Look here at this entry. It's a lie. It's a falsity. It's farce. It's all a joke. It's horse shit. I didn't know. Because if I knew this was going to happen, I would have went in 125x there with every single cent I owned. If I knew that was going to work. And then I would have retired. You know what I'm saying? I'd be done with it. Because the P&L, the trade I just closed was this trade, right? I just closed it so I could take this trade. But the P&L was up over 600%. That's what it said, the ROE, 600%. So if I'd have had 125x leverage on that on a 600% gain, that would be like a 5,000x. You know what I mean? It would have been like insane amounts of money. But I don't know that that's going to happen. That's why you can't do that. But you can consistently do the same thing and look for base hits. Base hit here, base hit there, base hit here, base hit there, lose here, lose there, base hit, lose, base hit. Over time, you generate a rising equity curve. That is a trader's goal, is to make the equity curve go up. So like if I take my money into, I don't know, who's money managers in the, like some money manager, like TD Ameritrade, for instance. If there's a TD Ameritrade office next door and I go in and I show them my P&L, my financials, my equity curve, and I say, I want you to do better than this, they're going to laugh because they can't. You know what I'm saying? The only thing they can guarantee is a 5% per year gain. That's all they guarantee. And, this year they probably couldn't even guarantee that. Your goal as a trader is to learn the technical levels, to understand that markets usually respect those levels. When you go into the market with risk, you're using a very small percentage of your overall equity, and you're not doing it 1,000 times a day. You're trying to do it once per day. You're looking for one good trade per day. That's it. Because the more you trade, the probabilities are you're going to lose money. It's a mathematical calculation. The more chances that you take, the more chances you will be wrong, right? You will lose. So you take your winners and you close out the day. That's why I'm usually done trading by 10, 11 o'clock in the day. I have the rest of the day to do whatever I want. If I want to play Modern Warfare 2 all day, I can. If I want to go to the beach, I can. Whatever. My job is done. My job is done. My job was to come in here, find one profitable trade and go. And if I don't make money that day, then I lose money that day, right? That's the life of a trader. Some days you're going to be green. Some days you're going to be red. Some weeks you're going to be green. Some weeks you're going to be red. Now, what you never want to do is be red on a month. If you're red on a month, you're doing something wrong. You never should be red on a month. All you need to do is make one trade per month. 2 trades per month. Right? That's it. That's all we're doing. So if you stick around this channel, you will learn these levels. You will start to understand. It just takes time, repetition, experience, right? All these things, this is all on you. This is all on you guys. You got to learn it. This bar replay tool, phenomenal tool to help you understand the way markets move and respect and how they, how they react around specific levels, liquidation zones and targets and all these things. You'll learn it over time. It just takes time. So you can't rush learning. You just can't. It takes time. And if you don't know what we're doing here, then I strongly suggest that you don't use real money. There is a paper trading account on TradingView. You just click on it. And you can put however much money in it you want and trade that. Treat it as your own capital. Say you have $5,000 that you want to risk in the markets, right? I've got $5,000 in savings. I can trade with that. No, you don't. Because you're going to lose the first 5 years of your trading life, probably, right? Use fake money and only use fake money until you can make money in a fake account. If you can't make money in a fake account, you won't make money in a real account. I would rather use real money, but not your $5,000. Deposit $100 and trade that $100 till it's gone. Then do it again and again and again, but never, ever size up. Because if you're consistently losing, you're going to lose it all if you start sizing up. Sizing up has never been the reason they're profitable. No one in this world can say, well, I was never a profitable trader until I risked it all on one trade and now I'm rich. No, that's not how it works. Because then they'll just try to do it again, right? Because it worked that one time, and then they'll just keep doing it again and again and again, and all the money they won, they'll lose. It's essentially playing the lottery, but there is an edge, right? It is gambling, but there is an edge. You see me consistently come out here and do this over and over and over and over again. Consistently. And another thing, show me someone that's got a better entry on the USD JPY short. Show me one person on Twitter or YouTube that has a better entry than this. That's not luck. I took that short right there at that specific time because of the USD taking out the previous week's high. That's why I entered there, right there. I waited for the dollar to do that. When the dollar did that, I got short. Did I know it was going to work? Nope. Did not. I had a little bit of an inkling that it might, right? But that doesn't mean it will ever. These are daily candles. So I've been sitting in this trade for weeks now. With good reason. But you can see how the market respects the levels, right? There's the range for the dailies. Right there. Boom, 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 till it broke down. So this showed the market had a willingness to trade down. Now your range is here. Here. And there. Until you get a daily close above or below this, these are your areas of operation. You're either a buyer here or a seller there. Always, always, always. That will never change. You never want to be a seller here. Ever. You want to only be a buyer. All right? Always. Because it's underpriced. That's where you're a buyer. You can short it here and buy it back down there, but you're always only ever going to be a buyer on the bottom. You're never going to be a seller. And you're only ever going to be a seller on the top, whether you buy it here and sell there. Right? But you will never be a seller under this. Never. You can be a buyer or a seller up here and then take profits there, move your stop to break even, and then if you're lucky, price does break down like it did here, right? Then you will make more money. But you don't know that's going to happen. So you will never be a seller under this level. You don't short into support, and you don't buy into resistance. That's doing it wrong. It's completely wrong. It's the opposite. Breakout traders do that. That's what breakout traders do, and they're doing it wrong. Are there any successful, profitable breakout traders? I'm sure there are. I watch Ross Cameron do it. He's a breakout or a breakdown trader. He's doing it on a much smaller scale with a lot of money, but he's making millions and millions upon millions of dollars a year based solely on selling courses and chat rooms. So he can afford to risk $2,000 per trade. He's making more than $2,000 a day selling courses. Can you do it? Probably not. Not at first. I know many people that's blown their accounts trying to trade penny stocks, trying to do the same thing he does. They just can't. They just can't replicate his results. This strategy that I'm teaching, anybody can replicate those results. It's simple. My whole shtick is simplify your analysis. Quit looking at all the stuff that doesn't work. Start looking at the stuff that does. If I'm able to come on this YouTube channel twice a week and show you trade after trade after trade after trade after trade that were winners using the same exact strategy, and it's all free. Like, the Discord is just set up for people that just want to ask me questions 24/7, right? Because they get instant results most times. If they ask me a question, no matter where I'm at, I answer. That's why they're in the Discord. But I don't hold anything back on these public streams. This is free. You can learn it. You just got to watch it. You got to sit through my annoying voice, but you can learn it consistently. You can do the same thing over and over and over again. This trade's not working out, right? So what do I do here? Usually after an hour, if it hasn't worked, I usually just close it. And I entered it twice. So I took the position off when it started to go up, waiting for a high day liquidation. Once it got back under it here, I just went ahead and took it again. Or was that over here? No, it was over here. Yeah, over here. So far I've been sitting in this position since there. That was at 10:45. It's 11:59. So over an hour, and price is right back to my entry. Right back to my entry. So that tells me that there's a probability, a high likelihood that I am not on the right side. If I would have taken profits here, I could have made money. But that's not a very big, for the risk, it's not a good reward. So if you took this trade with me, I leave it up to you to decide what you want to do. But you can clearly, on the left-hand side of the screen where it says Bitcoin 30, that's a 30-minute time frame, you can clearly see the range of operation now. Right? There. Closed there. Here. You haven't closed anything under it. You haven't closed anything of it above it. This is your area of operation. So if you want to take profits here, be my guest if you get another chance to. You probably won't, because up, 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 up. You've been consistently closing 30-minute candles higher. This one just opened. So if it doesn't close below the open of this green candle, I would scratch the trade at the very least. Or if it don't start making a move soon, scratch the trade. The dollar is back above the high of day, so this trade could ultimately end up working out. Just make sure your risk is there, at least. And there's nothing that says that price won't go up, stop you out, and then roll over either. And I can't tell you if that will happen. I can't see into the future. So how you manage a trade is going to be up to you. I'm just showing you the levels to operate your trade in. That's it. I'm showing you where the market levels are. And then over time, you will be able to do it yourself. And then you won't even need me anymore. All right? Simplify your analysis. Simplify it. Make it easier for you. Easy is good. People don't believe that easy works. Most cases, easy is the best case. Just learning the terms and all that stuff will take you time. It'll take you a long time to get it. But please, I promise you, if you stick around and ask questions, you will learn. Whether or not you can turn that into a career or not is up to you, right? Because people don't tell me all the times that they're over trading. They're not telling me when they took 37 entries today. They're not telling me all that stuff. If you're doing all that stuff, and I'm talking to you, stop it. Stop it. Find one place to take an entry. If you lose the trade that day, stop for the day. You're done. Close your computer screen. You don't even need to know what else happens throughout the rest of the day. Which platform do you use for day trading? I use Bitget to execute my entries. This platform. Here is my entry right here. This is what I'm risking up there. This is Bitget. There is a link in the description. Please do not put a lot. Just put the amount of money that you can afford to lose. Put that on exchange. This is the price that we have to pay to play with cryptocurrencies. It's an unregulated industry. So I only keep a small amount on exchange. So that way, if something tragic happens, then I just lose that small amount. But you got up to 125x leverage that you can use if you so choose. Right? So you don't need a lot of money on exchange. But this is the exchange that I use. It also uses TradingView to chart. I chart everything on TradingView, but I place my orders here. I also place orders from Oanda and Forex.com on TradingView. All right. Some crypto brokers, you can use TradingView to place orders. Like that entry that you see there, that I took that entry on this platform, right? On a Forex broker though. Oanda and Forex.com are the Forex brokers that I use. So I can take trades directly from TradingView with those two platforms. But for cryptocurrencies, Bitcoin and the like, for day trading, I use Bitget. There is a link in the description. Use the referral code XTSC, X-Ray Tango Sierra Charlie, when you either put capital on exchange. If you don't, like if you take Bitcoin or USDT or any other cryptocurrency from a cold storage and put it on exchange, then you don't even have to KYC. If you want to use this exchange to buy cryptos, or if you want to tie your checking account to the exchange, then you got to KYC. But if you're just moving funds from cold storage to the exchange, you do not have to KYC. And moving funds from and to Bitget is simple, it's seamless, and it's easy. It takes the same amount of time, obviously, to move Bitcoin anywhere, but as far as getting my money off exchange, I still do. There is a pop-up. If you're in America, there has been a pop-up lately saying something like, I'm sorry, but you're not given your IP address, whatever. You're not supposed to be trading here, but it's not true. You just click OK and you log right in, right? I was told by my representative that they had to do that for compliance reasons. To comply with U.S. regulations, they had to do that. That's just the answer I got, so I'm giving it to you. But yeah, I don't want nobody to lose money, but I've been assured that they're okay. They're not going out of business anytime soon. As a matter of fact, they're running a trading competition right now. They're doing good. They're prospering. Another thing that I like about Bitget is the other day when we had all that volatility on Bitcoin, some exchanges were down. Some people couldn't execute trades. They couldn't either close a position or enter a new position. On Bitget, I did. I took the position at the high of day, at the daily open, at that weekly supply level. I got short there. So I was able to operate, enter and exit trades while all that volatility was going on. And my fill was fantastic also. I didn't get filled at a wild, crazy place. As long as you're trading assets with a lot of liquidity in them, like Bitcoin futures or something, you're going to get filled right at the bid and ask. Right at it. I've never had an issue with slippage, but on one occasion when I tried to trade Luna C or Luna 2 or some crazy, after Luna collapsed, I got filled all over the place on that trade. But if I'm just trading Bitcoin futures, I never have trouble with fillage or slippage. It's a good exchange for what I use it for. When I get when I make a substantial amount of money, or if I get a specific amount of money, like up to 10 grand on exchange, I withdraw it all and leave like 1,500 on exchange. And then I build it back up to 10 grand and then I take it off. I build it back up, I take it off, right? That's what you should do. That way you never have like life-changing money on exchange. You can get really seriously hurt if you do that. So I'm going to exit this position. It's got a very tiny, small profit on it, but I don't trust it any longer. I mean, with the dollar shooting up, making a fresh daily high like that, and Bitcoin just still playing around this level, I'm losing my patience with it more than anything. It's really not looking great. So like you weren't even able to trade under this candle's open for a very short period of time, right? And you're going up. So, I mean, just by looking at the market, to me, it looks like I'm on the wrong side of the trade. This has been 30 minutes, 30 minutes, 30 minutes, 30 minutes, 30 minutes, 30 minutes, 30 minutes. That's a long time that it's been trading in this range. It's going to break out soon, up or down. Hopefully for you, if you stay in it, it's down. But for me, I don't even care anymore. Because I have lost my patience with it. So I'm going to exit this position before it turns into a losing position right now. Here, I do it right like this, right? Just close all positions. There's only one position down here. Just one. All right. And with the fees, it will be a loss. Right? Because I'm using 25x leverage on the position. So by closing it out right there with like a 2%, I will probably lose a little bit of money. Right? So let's see here. I'll just show you. All right. So according to this, I'm at 2.5% ROE, $42 in profit. P&L says, or the account equity, 810. Close the position. See here? 1791. It was just at 810. 810. So by closing that position, it went down to 1791. That's the fees that I'm talking about. The higher leverage you use, the higher those fees are too. So keep that in mind. Even though I was in profit 2%, I still lost money. The P&L should have exited out at 810, but it didn't. It exited out $20 cheaper. So that's your fees. You got to be up almost 5% to make money, to make the P&L go up.
but I don't like this anymore. All right, let me just skim through these questions real quick, and then I got to wrap it up. Been live for 2 hours, almost 3 hours here. Can I please answer this? Okay, yeah, but using the daily high and low, what time frames? For that question, like I did a big rant earlier, this is an indicator that you can use. It's called volume profile. This box, you can shade it in, will show you right here. Just shade it in to as dark as you want. The color, whatever color you want. This box shows you where the open is here, right? That's your open. It shows you where the high is. There's your current high. Your daily highs and lows will vary. So like if this keeps going up, then this high will no longer be the high. It'll be whatever this candle does. That will be the new high. But your open will always be your open. This will always be the price that it opened at on this day. It will never change. Your highs and lows can change. As of right now, this is your low right there. Right there. This is your high. This indicator is called, go into technicals, right here, middle down, technicals, and in the middle here, volume profile. Right there, session volume profile. Session volume profile. It shows you everything. It shows you the volume, what the most volume is at which price. It shows you where your daily open is, shows you where your daily high is, where your daily low is. Here is yesterday's range, right? Here's the open. There's yesterday's high. There's yesterday's low. There's yesterday's close. The close will be at 1900 hours, so at 7 p.m. The close will be here. So as of right now, this is your open, high, low. You don't have a close yet. This box shows you, so you don't need to even know if you use this tool. And then using this tool, over time, you will start to understand what the daily high, low, open, and close is. But as a day trader, we are trying to take positions inside of this range, from here to here, inside of there. We're trying to take a position and make money. All right. Yeah, that was 2 of you asking the same question. So hopefully that clears it up for you. And Johan, should I wait for the full hour and see if it's above the day's high before going long? No, you do not want to take a long above the daily high. Ever, ever, ever. Never, ever do that. Never, ever do that. Because if you get long here, what's likely going to happen is price just is going to go up there and then start to trade lower because of profit taking. And then also people will start adding shorts up there. So you never want to get long after liquidating a day's high. You never want to get short after liquidating a day's low. Ever. That's breakout trading. And in my opinion, I tried it. I tried it in the beginning and I could not make money doing it. That doesn't mean that you can't, but I could not make money trading a breakout, waiting for the breakout to get long. It just doesn't make sense to me anymore, especially, right? Because I've seen the market do it so consistently. It goes up, liquidates a daily high, and then for the rest of the day, just trades choppy sideways to lower. Your daily candles, are typically, they're built the same way every single day, all right? They're built the same way. A candlestick, let me find my brush. A candlestick, you will open the day. Usually you will go up for the fake out move, then your expansion lower. Once you set the low of day, then you trade away from the low of day. And that's what your daily candles usually, that's the daily range. That's how it looks on an intraday chart. Almost always, right? On an expansion day. There are days where you're choppy and you just do something like this. Open, up, down, up, down, and close, right? That's a choppy day. We don't want to operate inside of that. But a normal day and an up day, like a bullish day, you'll see the open, it'll trade down, set the low of day, then you get your expansion up, and then after it meets the high or whatever it's going to say the high is, it generally trades lower and lower until the close. Then you repeat the process. The best way to see that in action, if you can't understand that concept with the candlesticks on a daily time frame, use a bar chart. Bars. There you go. There's the open. The open is always on the left of the candle. The close is always on the right. This is your candle. That's your daily high. This is your daily low. You opened, you traded up, then you expanded lower. Then you trade off. So if you would have short here, or say this was the low, you would have shorted there. It wasn't until you got here and then price just came right back up and closed. The next day, open, up, down, close. Next day, open, down, up, close. Next day, down, close. We're trying to make money from here to there. That's what we're trying to do. We're trying to position ourselves short here and take profits somewhere as it's going lower. Down, we take profits. The reason I don't look at a bar chart is because it's hard to see on the black screen. But that's your bar chart. That's how price operates on every time frame. It does the same thing on every time frame. Open on an hourly. You didn't go down. You just open up, close, there. Same thing here. Open up, down, close, open up, down, close. So how do you identify support and resistance like this? It is freaking simple. Resistance until you close above it. Support until you close below it. That's your support, that's your resistance. Same exact thing. The difference between this and a candlestick is a candlestick shows you a body. It fills it in. But this is the same principle that every single candlestick operates on every day. And all we're trying to do is somewhere at the open, we're either looking for the candle to expand lower or we're looking for the candle to expand higher. That's all we're doing. All right. You guys have a fantastic day. If I missed your question, just put it down in the comment section and I'll answer it there. All right. You guys have a fantastic day. Make sure you guys trade safe. Make sure you trade smart. And as always, happy trading, everybody.